what's up folks? This is Ferris with Trade with Tex, and today we're going to be talking about how to get pinpoint accurate levels to use as price targets for your trades, okay? And just to kind of set the record straight right off the bat, this is for swing traders or day traders, doesn't matter what your investment time frame is. This also is universal because we're going to be using Fibonacci levels, which basically are key levels that we use on a regular basis in Trade with Tex. They give us very, very accurate entry and exit points, okay? Now, real quick, if you are not subscribed to the channel, check it out. We got plenty of educational videos on there. And if you actually want to join us in chat, you can join us for a free week via tradewithtex.com. We basically have a free week trial where you can sign up, no credit card required, and you just get in there and trade with us, right? We have the live screen share. We teach you guys with 2 webinars a week, et cetera, okay? Now, let's get into the actual details here because this is something I've been meaning to put up for a while. Just been a little bit iffy as to whether or not I want to share it with everybody, but the more the merrier, right? So first off, we're going to use the S&P as an example, right? SPY, pretty common ETF, basically just tracks the S&P 500 index. And again, this applies to anything. So I'll roll it over to another stock after this to show you, but it's universal, okay? Now, this is the TD Thinkorswim platform. We're going to use a couple of simple time frames here. And again, you can do it on any platform that offers the Fibonacci retracement tool. That's this right here. If you click on drawings, drawing tool, and go down to this little percentage, that's Fibonacci retracements. That's what we're going to be using today. Okay. So first things first, you have to actually have the trade idea, right? It has to come from somewhere, whether it's a setup that you usually use or you just like the stock, as many of the Reddit users are doing nowadays. But for the S&P, we were already watching this long, and I'll remove the drawing that I got here just to keep it pretty black and white. We were already watching this long into this week. We were looking to buy it for a move up. Basically, the idea stemmed from this moving average support, and we were looking for a trend continuation to the upside, right? So the simple part about this, and this is a super awesome tool if you have a stock that is just flying and hitting new 52-week highs, because this will give you targets when you're kind of just throwing darts and you don't really know what the next resistance is, right? We use basic math, okay? So first things first, we're on the weekly time frame, meaning each one of these candlesticks represents 1 week, right? Now, going into this week, we did not have this information, right? We don't know what ends up happening. We're just looking for a move up based off of the setup that we were using, right? Technically, it's an ascending triangle. Call it whatever you want. We were looking for a move up, okay? Now, first thing we're going to do is we're going to go into the drawing tools, select Fibonacci retracements, and basically what we're doing is we're using range to our advantage here, right? Range by definition is just the distance between the low and the high. So we're using last week's range to gauge what we're going to get this week. Because a lot of times what people do is they'll actually just do this. They'll say, okay, this had a however many point range. I'm just going to use a measured move here, add it to the top. Bada bing, bada boom, we're done, right? But that's not really realistic because if we have a big lower shadow on the candlestick like this, that's going to completely offset our targets, right? So what we do is we use the Fibs instead. We go into that Fibonacci retracement tool, okay? This is where everybody gets tripped up. I'm going to make a big point out of this because even some of the members still get tripped up with this in the chat. If the candlestick is green, you're going low to high, okay? You're drawing left to right because if you don't do this the right way, your numbers will actually be wrong. So when I click the candle, you'll see I'll do it a little bit to the side here, left to right, because we moved up for that period. If the candlestick is red and you're projecting a move down, you're gonna go the opposite way, right? Because that's how the Fibs would work. And again, the idea here is that this week, if we separate it into 5 days, 2, 3, 4, so 1, 2, 3, 4, 5, right? It was actually a 4-day week, but it doesn't matter. That inevitably we ended up higher on the week, right? Since it's a green candle. So when we draw our Fibs, we can't draw them from high to low. We're going back in time. We need to draw them low to high, okay? That's the easier way of thinking about it. But again, green, you're going left to right. If it's red, other way around, okay? So in this case scenario, we are going bottom to top, right? So I just clicked on the bottom there, went to the top, and we can zoom in just to make sure that I get this point across. So I pretty much drew it from this low to this high, okay? Now you might be thinking, all right, we got these key levels, how the hell is this supposed to help me? The way this is supposed to help you is by just using the Fibonacci retracements as targets. That's it, right? So by default in your platform, and this is where a lot of the YouTube videos that you found before this probably aren't gonna help you. By default, your platform, if you double click on the Fibonacci retracements, it's just gonna have this, 0 to 100. But what we're doing is we're using the same Fibonacci math to forecast the price target above. So basically, all you're gonna do is you're gonna uncheck these boxes. You can leave the 0% fib on there because that's basically just the high, last week's high. And in order for the trade to work out, obviously we need to be above that, right? So what I normally do is I actually put this in yellow. It's not really that important, but just a little side note for the members that see that every day. And then you have to add these curves above to get the targets. So you go down to this button down here, add curve, okay? Because I think by default you do not have these even available, right? Let alone visible. Click add curve. Oh, I guess I got too many. Let me remove one. Add curve, and all I'm gonna do is I'm gonna put minus 0.236. Okay? And then I'm gonna change the color here to green. And that by default, next time when I do it, will be up there as long as I click save as default. All right, this is mainly relevant for the Thinkorswim platform. Notice I also put this in green to make sure that I know it's a price target, right? Green above, those are targets. So what happens is when you do that for minus 236, minus 0.382, minus 0.5, minus 0.618, minus 0.786, you have now added the Fibonacci coefficients as price targets overhead, okay? Now, after you've done this, again, do not forget to save it as default, okay? That way it has it there every single time. And you can just go back through real quick, and I'll show you how quickly this is, right? I'll cancel it, delete it. So I'm going bottom to top, left to right, right? That's the easy way of remembering it, okay? Double click, I'm gonna uncheck these boxes, and I'll check these above. I'll just check a few of them because we haven't moved a whole lot this week just yet, okay? Now we can zoom it in just to a lower time frame, doesn't really matter, and you can see how well that target worked, right? When we finally got the break above the resistance, point A to point B, if you trade options, you know how helpful this is to nail a great exit on the S&P. If you trade futures, same deal, okay? So that's basically how it works. You're just using last week's range. So again, the weekly time frame, that is a default one that they have in Thinkorswim. Draw them low to high, left to right. Check those boxes. You have to actually go through and add those boxes. Do the work yourself. I know it's tough. And then you have the targets for the upcoming week if we were to break higher, okay? Remember, you need the trade idea first, right? You need to say, okay, this is setting up, I'm gonna watch for a move higher. So for example, let's use another one, one that we've been trading a lot lately, not so much this week, but a couple weeks back, Ford, right? Ford unveiled the new F-150 Lightning. You know, they've been killing it with the pre-orders. It was a momentum stock and still technically is for a few weeks there, right? Ford went from the 11s to the 16s. Now, 2 weeks back, we saw this breakout on Ford as an opportunity, right? We said, all right, let's say that Ford breaking out through this box, that's the chart pattern right there. Let's say that it keeps following through after this week. So we're looking at it from this week onward, okay? Now, if it were to keep following through, what targets are we gonna use? These are new 52-week highs. We got nothing to go off of here, but have no fear. We're gonna use the same fibs that we've been using, okay? And you can see that we even used a larger time frame here from way back when. and got that 1577 long-term target. So long-term investors, this works as well. Okay, so basically all we did, or all we have to do, and again, we're not playing it this week, this was 2 weeks back, but I'm just showing you. Bottom to top, left to right, easy way of thinking about it. Okay, go through, double click, or you can just right click it and hit edit, doesn't matter. Okay, double click. I'm gonna uncheck these boxes except for the 0% because I wanna make sure that it's breaking out, right? I don't wanna just throw money at it and hope for the best. And let's look at these targets. This is the full range of targets because Ford ended up following through, right? It got an upgrade, had a lot of momentum. And let's roll this back to, let's just go to the hourly here so you guys can see. So target 1 exceeded, 2, oh, sorry, that's a different one. 1577, ignore this one. This is an old one. I'm changing the color here. Let me put it in beige so I don't forget about that. All right, 1591 is the next target. So target 1, 2, 3. On day 1, we hit targets 1 and 2. On day 2, we hit targets 3 and 4. And then we ended up selling off pretty aggressively from there. Okay, that was the first big red flag that this run was done. Okay, so it didn't end up getting all the way to the last target, but we're taking it one level at a time, right? If it breaks and holds that one, great, up to the next one. Breaks and holds that one, up to the next one. So for Ford, see how it got rejected here? At 1644, that's the 61.8% fib. Okay, since it got rejected there, that's a no-go for the last target. We're gonna drop back down. All right, so simple enough. This should help you guys big time for using fibs as price targets. It works for options, futures, stocks, penny stocks, crypto. It's universal, right? As you guys know, Fibonacci's are universal. And if you don't, we got plenty of videos of them on the YouTube channel as well. Okay, but hopefully you guys enjoyed the video. Let me know how this works for you, or if you use something different. It's always good to bounce ideas off of one another. But this is how we use our strategy. It works. We make money off of it. And if you want to see it live, you can join us in the Trade with Tex chat. All right, link is in the description. Okay, have a good one, folks. Enjoy.